Welcome to the daily video update, Snapshot edition. This is being prepared Monday, March 28th, where I'll briefly cover the high points of what happened in the market on Monday, and then see how things look for Tuesday, March 29th. Getting near the end of March now. So just to go over this briefly, we had a flat open. The futures were slightly positive, but we saw a little bit of selling and a little bit of buying right at the beginning. After the open was dealt with, and that's usually anywhere from the first 60 to 90 minutes, we saw selling drop prices down in the S&P to 45.20, right about at that level, actually 45.17. But then something interesting happened. After we hit that 45.20 area, prices were able to rebound and actually get above the unchanged level. So it was looking like we were going to be negative. We went back and were able to go into positive territory. We rebounded all the way up to R1. Then as the day went on, there was some late day buying that took prices all the way up to R2, and we ended up closing right at the high. So we were up 0.71%. One thing that is a little concerning is that volume was below average. And last week we saw each successive day have a lesser amount of volume. Monday's volume was also below average, but it was a little bit higher than Friday's volume. The technicals are looking quite positive right now. We're getting near the end of earnings season. The big talk these days are inflation and interest rates, geopolitical concerns, and I go a little bit more into depth of those things in the long version of the daily video update. And then you're hearing a lot of talk, or probably hearing a lot of talk, about a thing called the inverted yield curve. And I was going to address that in the daily video, but the videos are long enough as it is. So I'm going to be preparing a separate supplemental video that just talks about the yield curve and some research and some things that I found, and then some tools that we can look at to help us navigate through this. So what are some comments from Monday? The S&P is out of correction territory. As long as we have another up day, it continues to improve. The technicals are positive and improving. We're looking fairly positive right now because the S&P was able to break above the 100 period simple moving average. That was kind of the last moving average that I chart. We still needed to get above that. Well, we were able to get above that and close above that on Monday, but prices still remain in a range. And as we go up, we're getting closer to that short-term double top that we hit just before prices really started to go lower. So that could be some heavy overhead resistance. Russia, Ukraine is still, of course, at the forefront of all the news cycles. And we had some information come out over the weekend about statements that the president made while he was in Europe that are causing some confusion. Does this mean the US is going to step up things? Does it mean we're backing off, or what's going on with all of that? And now the debates are going back and forth as to what that means, but it's causing some confusion right now. Of course, we have inflation and interest rates that we're watching on a daily basis. There are still the lockdowns in China, which could feed into their economy, which eventually could feed into some more of the supply chain issues that we've already been having. And then the inverted yield curve that a lot of people are talking about. And like I said, I'm going to prepare a separate video that goes through that. The economic reports were not very influential. There's some big ones coming out later in the week, but the ones on Monday, they're nice to know and they add to the overall picture of the economy, but they're not real market movers in and of themselves. If you look at the S&P by itself, it's still considered to be overvalued. But if you compare it with margin debt and interest rates, we are still fairly valued. And then our trend right now is positive and could be, it's weakening right now, but it could be starting to turn. And I'll show a chart of that briefly. Because we had the update, our bias was positive, and the last number of days have been positive. So our momentum is also positive. So here's the first chart where it just shows that we were able to break above this resistance level. And that's positive. We actually closed above that on Friday, which was positive number one. And then we were able to break through that again on Monday and close right at the high. But we still have some significant resistance right above where we're at right now. Looking at volume, you can see how it trailed off last week and was a little bit higher on Monday than it was on Friday. Looking at the trend, we are showing where the trend is positive because the green line is above the red line and the ADX is falling, but with these lines getting a little further apart, it's starting to turn up ever so slightly. We'll have to see if we get any follow through to that. The Arun is also looking positive. It shows that buyers are really in control right now. Sellers are decreasing. So our oscillator overall is above zero and improving. Then the moving averages, I usually don't show this chart, but I did here because we were able to finally get above the 100-period moving average and close above that. So now, if we start to decline from here, we're looking at a lot of these different moving averages as possibly providing support. We, at least with the moving averages that I plot, we don't have any more overhead resistance. We have price resistance levels. Here's that double top right in here. But as far as moving averages right now, we don't. Here's the moving average rainbow where we're trying to peek our head out to the other side. As long as we can stay above all these lines, this overall rainbow will continue to improve. Then we are above the 200-day moving average. So that is helping the long-term trend turn back more positive. So what are we looking for on Tuesday? We're out of correction territory. And excuse me for my voice. The markets still remain in an intermediate term range. I'm sorry again. I'm still dealing with some heavy congestion and I can't pause the video while I'm recording. We're nearing that short-term double top that caused some problems a few weeks ago. We're getting near the end of earnings season. There's still this battle going back and forth between growth and value. And then there are some yield curve concerns, meaning that we're seeing inverted yield curves where shorter term interest rates are higher than longer term interest rates. And again, I'm going to address that in a separate video. On Tuesday, one thing to watch for, now this is going to recalculate right after the open, but the 200-day simple moving average for the Dow is at 34,979.33. It'll be a little bit different than that once prices open. But that's the 200-day moving average. And a lot of people use the Dow as their thermometer, if you will, for how hot or cold is the market. And if we can get above that 200-day moving average and then stay above it and close above it, that would really help a lot of people feel better about things. On the other hand, this may act as overhead resistance as well. So we want to keep an eye on that. The economic reports coming out on Tuesday are consumer confidence. We have the job openings report, the FHFA housing price index, and the S&P Case-Shiller home price index. The biggest one, in my opinion, is the consumer confidence. And we're seeing a real decline on that with sentiment that I talked about in the last video. Well, let's see how this feeds into that and either confirms it or maybe opposes that. We have the Russia-Ukraine situation, which that kind of helped the markets a little bit on Monday, where there was a statement that came out that said Russia might be willing to slow down things and it would be okay if Ukraine joins the EU, but they don't join NATO. And the market's kind of like that. And then, of course, the lockdowns and some of the economic slowdowns that are happening in China. And then some of the fallout that has come from the NATO meetings, specifically statements that the president made that are, he said one thing and then the White House said something a little bit different. And what does it all mean? What's the stance? Where do we stand right now with all of that? So that can be a bit confusing as well. So our different scenarios, if we're looking negative, A is still looking as the most improbable right now, where we go back to the trend before the Fed meeting, which had been negative, and we're only bouncing to wear off the excessive pessimism that we were seeing at that time. Well, that's looking less and less unlikely now. A more likely scenario would be either B or C. If we see prices fall from here, is that we are short-term overbought. We're seeing a lot of that in our indicators. And we also have price resistance above where we're at. And then the other indexes like the mid caps, I believe the Wilshire and the Dow, they're all trying to bust above their 200-day moving average. So that could also provide resistance. And then the market is really paying attention a lot to interest rates. And if bonds really start going down, that means interest rates are going up. And if they really start to scream higher as far as interest rates, that could bleed over and potentially produce some selling in the stock market. That's the negative scenario. The positive scenario is that we're coming up out of a base. Our oscillators are positive. Our moving averages, now we're above them, so they're providing support, but we still have resistance right now, especially price resistance, and then moving average resistance on other indexes. And we were able to exceed that previous high. Well, can we even go higher from here? And then just a general disbelief. A lot of people are real suspicious of this bounce that we've been seeing, thinking, oh, we're just bouncing before we're getting ready to head lower. Well, that's a lot of times when the market does its best, is when people don't really believe it can happen and they kind of watch it. It's known as a wall of worry, where it can't go any higher, it can't go any higher, but yet it still goes higher. Well, about the time everybody says, okay, now we think that this uptrend is for real, then that's about the time when it's over at that point. So there's this disbelief that's going on is really helping to fuel prices to go higher. Then the number 3, which is looking less likely at this point, is that we get into a sideways trend. If the ADX continues to fall, that may happen. But right now, we're looking at it turning up ever so slightly. But if we do see price movement really slow down and get more into a trendless environment, then that might be where some of the sideways or market neutral strategies are better implemented, even though the volatility may mean you bring in less. So to conclude, this is that the S&P is positive right now, but still is in a range. Short term, we are positive, but we're getting some overbought signals, and we're getting to some overbought levels, as well as price resistance above where we're at right now. Intermediate term, we are positive. Our oscillators are positive. The moving averages are providing right now support, but there's other moving averages that could be providing resistance in other indexes. And then long term, we are back above the 200 simple moving average, which helps the long-term trend improve the longer we can stay above that. So thank you. If you want to have a more in-depth discussion or explanation of what happened on money, please watch the entire daily video update, and I will prepare this again after Tuesday's close.